Gentlemen, how are we? So today I'm going to go through some basics about what we actually do in these meetings. Obviously you guys have got a fundamental background in the industry, and these clients, although they are set up quite differently what you'd expect with an investment-based meeting, I think it's important to know that a lot of your fundamental knowledge carries over to this kind of transaction. So I'm going to go through a few details. I'm going to go through the lead itself. I'm going to go through what they're expecting, and someone's about to walk through the camera, that's fine. What the clients are expecting in this meeting. They're going to go through as well the different parts of the process we're going to do to execute this deal and where exactly we make our money. Alright, so the first part is this lead is nurtured in the context of purchasing a property without a deposit. Where the 99% of the population is dealing on getting clients across the line who have a deposit, have serviceability, have everything ready to go with a pre-approval, and they're trying to sell that house. We're trying to say to people, you've been renting for the last 10, 15 years, you've wasted all this money, this is your opportunity to get your dream home, how can we help? As you're aware, we are a lead provider. So not only do we make our money by sourcing these properties for them, but also we make our money by providing them through, taking them through a process where a financial planner is engaged, as well as a mortgage broker and even a general insurance broker to get this deal done. This lead understands that this property that they can purchase should sufficiently accommodate for them owning their own property. They don't know anything about the property in general. This meeting is being booked with the provision that there's an opportunity for them to be homeowners, something they've always been yearning for. So this client is engaged and they're excited. Step one, this is not a client where you have to push the idea that this is what you need to do. These clients already have that idea, but your responsibility, your job is to take them from how this dream just seems a bit too good to be true to the actual theory and logic behind it that can make this dream a reality. All right? So this lead comes through our social media enterprise. They're talked to by our colleagues in-house. A relationship and rapport is established, and they're asked to fill out a questionnaire which articulates whether they meet servicing requirements or not. The first part of the meeting, I want you to go through how we do it. We are fully transparent in every aspect of what we do, otherwise it comes back to bite us, and we base our whole business being off trust, as you know. The way we do what we do is we negotiate a deal with the developer, or with the real estate agent, with the homeowner, where we get a commission for selling this property, but instead of us pocketing the commission like every other agent out there or every other introducer out there, we then provide it to them, the client, as a loan with very good terms. I'm going to give you a working example. So a working example is a client in Yandina. This client in Yandina is actually renting at $7.15 per week. That's their current rental rate. We managed to get them a place at $520,000. We would issue a $40,000 loan at 6%, paid over 8 years. That payment came out to $526 per month for our loan. On a $40,000 loan, they were paying about $56K in its entirety. So they're losing about $16K over the space of 8 years. But in context, with the remaining bank balance, and we've done the whole loan in total, it ended up being $625 per week. $625 a week for a 4-bedroom, brand new house on a 600 square meter block, compared to them renting at $7.15 a week for something similar, a bit more run down, a bit more beaten down, in the exact ideal location they wanted. So we have the stock within their area, and it works out cheaper for them. In the context of going with us, yes, over 8 years, they're going to spend an extra 10 or 15 grand. That's fine. But in the context of how we're positioning this, we're working on Australian standards. The Australian standard time frame to execute a deposit is 10 years. So in 10 years, that client is expected to come up with a deposit, LMI, and stamp duty. A fair chunk of money, considering that they're already paying $500 a week on average towards rent. So in that 10-year life cycle, just on rent alone, they're going to blow $260,000 while trying to save, with your deposit, with your stamp duty and everything, the equivalent of $160,000. What we're doing is we're superseding that whole process and allowing them to own their home from the second it's built. Saving them the difference between $216,000 and 15 grand. Mr. and Mrs. Client, do you agree that makes sense? Yes, it does. So how are we making the money? The commission we'd otherwise get, we're lending it to you. So we still win. We get 40K in commissions that we lend back to as an example. Obviously some developers, some people are different, but 40K is what we've negotiated to the most part. We provide that to you, Mr. Client, and then you, over that period of time, plus what you give us what you owe us, give the bank what they owe them, and it still works out to be, in most cases, cheaper than what you're paying on rent. Does that make sense, Mr. Client? Yes. Any questions? No, it doesn't. So, disclosing how the system works is very key, very vital. Articulating to them as well that there is a risk towards us. The way we protect that, Mr. and Mrs. Client, is we put down a second mortgage on your financial position. That means if you decide not to pay your mortgage, the bank has the opportunity, just like anyone else, to foreclose on your home. If the bank decides to do that, they sell the home at whatever rate they want to get their money back, and we stand the risk, of course, Mr. and Mrs. Client, that we don't get that money back. Hence the reason there is a weaker risk to us. But what we understand, Mr. and Mrs. Client, that you have been dreaming about owning your first home for a period of time, and therefore you are not willing to compromise that by missing a payment, especially if it's costing you less. Does that make sense, Mr. and Mrs. Client? Yes. We do not just help people who don't have a deposit. Obviously, if you're a business owner, Mr. and Mrs. Client, then it makes no sense for you to take $40,000, $50,000 out of your business and put it into your personal name, because you have to pay 47.5% of that to the government. Right? So that 40K deposit now becomes a 20K deposit. Does that make sense? No, not to me either. So instead of taking that 40K out, isn't it easier to take out $526 a month? That 15 grand that you lose over that period of time will be a lot less than if you went for it straight off the bat. So, beyond that, the next part of this is actually understanding how do we go through this meeting to actually secure that. What they're going to want to see next is serviceability. What am I eligible to receive? I really want that serviceability calculator to be done in front of them. Right? And I want them to see, okay, if you can get, after the serviceability, 460K, 420K, 500K, 700K, 800K, whatever that is based on their income, I want them to actually get some scope about what is possible. Beyond that, let's actually put a picture to it. You guys have stacks of properties around the area, and you guys know what meeting you're going into in anticipation. Around this price range, Mr. Client, don't show the price of the properties, go, these are the kind of properties you'll be eligible for. Let's put a picture towards it. But don't by any means indicate that these are the only ones. Mr. Client, this is an example of what you're eligible for, because as soon as they visualize that goal being a reality, based on numbers that they've put forward, now they're engaged. But there's a process for the client to go through. They now know how the process works. They've signed off on that. It makes sense against the actual normal standard way. Part 2, they now understand what they are serviced for. Part 3, they now understand visually what kind of properties they get. Now it's time to articulate the process in our terms. Mr. and Mrs. Client, as you can understand, there is a dramatic risk involved in what we're doing, not just for us, but also for the developer. We have to make sure that you can afford this. So, as part of our process, we need you to engage with a financial planner. The financial planner's responsibility is to go through your process and actually understand and show and demonstrate that you can afford to pay this off. They can afford and demonstrate what the payment terms are to get this completed for you. Beyond that, they're there to fulfill the questions of the bank prior to going in. This is not your open and shut client case, Mrs. Client, because at the end of the day, you don't have a deposit. You can't demonstrate that you've done this for a while, and you've done this successfully for a while. So we have to demonstrate firsthand that we can get this achieved for you. In doing that, What we're trying to do is go, okay, by seeing a financial planner, they have to accommodate a few things. Part one, they have to accommodate, can you service? i.e., do cash flow projections to say that each month you can afford to pay those payments. Part two, we want to understand what are your drawdowns to get it paid off the client. The bankers want to know an exit strategy. What is your exit strategy to get this paid off as quick as possible? So if you have a $400,000 loan, what's the assurance to the bank that you can get this paid within the 30-year period? This ensures that when we're going towards the process of actually executing, that they've got that proof and demonstrated ability. Next, in terms of exit strategy, they're going to know, can your superannuation accommodate that balance at the completion? If if you're 30 years old, your loan is going to mature in 30 years. So at age 60, 5 years from retirement, you have to demonstrate there's enough super in there to either accommodate your retirement or accommodate the completion of that loan. And if you're over 30, obviously it becomes more and more imperative. And the last point, Mr. and Mrs. Client, if you're a single income earner or both yourself and your partner go a long way in actually completing this loan, they have to ensure that if something happens to your financial and health position, then you can always complete with an insurance policy. If you pass away, is the bank still covered? Mr. and Mrs. Client, when you pass away, the bank don't come with flowers, they come with an invoice. What we have to make sure is that we can fulfill that invoice by making sure you're insured, either for life or TPD income protection. This is where we clarify what the need is for a financial planner at meeting. And you have to sign off on a financial planner. What you're signing up is $4,000 upfront, $22 ongoing service. That all comes from their superannuation. Now you ask this question to articulate whether they're on track regardless, because everything we do is about creating the element of doubt. Mr. and Mrs. Client, how many years have you been working on average? They'll say 10 years as an example. What's been the average income? Let's say 60K. So from the lowest to your highest, so 60K a year. So Mr. and Mrs. Client will do the calculation, 10%, $6,000 times 10 years, $60,000 being put in. How much do you believe you have inside superannuation? They'll generally give you 45 to 65 as a sort of basically the side. So Mr. and Mrs. Client, how many years to retire? 30 years. Assuming they're earning 100K at the same trajectory, now you've got 10 grand over the next 30 years, that's $300,000 plus your measly 45, that's $345,000, but you're now earning 100K. So Mr. and Mrs. Client, you have 3.45 years to die, otherwise you're going to have a pretty crummy retirement after that. Mr. and Mrs. Client, when do you intend to retire? When do you intend to die? You have no idea. So this is why we have to actually fulfill these means to make sure that we get this across the line. So stage one, we are going through the lead, you're meeting them, you're showing them what to expect, how the process works. Stage two, you're breaking it down to go, this is your serviceability, what you can afford. Stage three, you're presenting a picture of the kind of property they can afford if they were to do this. Stage four, you then sign up to the process. Part one is the financial planner. We need this to get this across the line. We engage the financial planner for you. We give you relevant paperwork. The next video that will come to you is how the relevant paperwork is used to get it across the line. And obviously you get your benefits from all this. Good luck. Talk to you throughout.